Hello everyone, my name is Aditia, and today I am very excited to present my mid-test analysis on SPM for the economic and business landscape analysis. For this mid-test, I will discuss about the electric vehicle market in Indonesia. This presentation will cover the current state of EV adoption, growth potential, and the key challenge. Let's dive in one by one. Indonesia is currently transitioning to electric vehicles as a part of its effort to reduce fuel imports, decrease carbon emission, and to promote a more sustainable future. Government policies such as President Regulation Number 55, introduced in 2019, have been introduced to support EV adoption by offering incentive and regulatory support. However, despite this effort, the adoption rate of EV remains low. This is because the high cost, lack of infrastructure, and uncertainty in the policies continue to hinder the market growth. For this presentation, we'll explore the key factors that influence Indonesia EV industry, potential solution to accelerate its development. But to understand the market potential for EVE in Indonesia, we need to analyze key economic factors such as market demand, consumer behavior, price sensitivity, and adoption trend. This will help us assess whether EV can become a viable mainstream option in the country or not. When it comes to EV adoption, consumer behaviors play a crucial role. Indonesian consumers are highly price sensitive, meaning affordability is key factor in their decision to buy an EV. Market research show that consumer prioritize reliable and cost-effective vehicles. However, concern about battery range and the availability of charging station make them hesitant to switch from conventional gasoline vehicles to an EV. Government itself gave incentive and policies. The Indonesian government has introduced various incentives to encourage EV adoption. For example, electric motorcycle buyers receive a subsidy almost 7 millions, and electrical buyers get benefit from zero import tax, lower luxury tax, and direct subsidies. This incentive help lower the cost for the consumer, but they are still not enough to bridge the price gap between EV and traditional vehicles, which mean EV vehicles remains pricey. Additionally, frequent change in policy and slow implementation of incentive create uncertainty in the market, discouraging both consumer and an investor. While we analyze the total cost of ownership or TCO consideration, electric vehicles are more expensive upfront, of course, but they offer a long-term saving through a lower maintenance and fuel cost. This is because the EV does not require an oil change and have a fewer moving parts, leading to lower servicing expense. Additionally, electric motorcycles provide cheaper daily commuting costs, make them a practical choice for ride-hailing and delivery services. However, despite these benefits, the high purchase price remains a major barrier for the many consumers. Let's analyze about the price elasticity and consumer preferences. Price elasticity is an important concept in AV market. Electric cars have inelastic demand, meaning that even if the price drops slightly, sales do not increase significantly. This is because electric cars remain expensive compared to internal combustion engine or ICE or conventional vehicles. On the other hand, electric motorcycles have elastic demand, meaning that price reduction such as subsidies can lead to sharp increase in sales. This tells us that if Indonesia wants to boost EV adoption, it must focus on making electric motorcycles more affordable and accessible to the general public. Consumer preferences play a crucial role in the adoption of electric vehicles, like I mentioned before. Price sensitivity and major factors, with most buyers favoring model priced below 300 millions. However, key barriers such as concern over battery range, availability of charging infrastructure, and uncertainty in the second-hand EV market discourage the wider adoption. Potential buyers worries about whether charging stations will be accessible for daily use and whether EV will hold their value over time. Addressing this challenge is essential for accelerating EV growth in Indonesia. Indonesia EV market is experiencing steady growth, with electrical car sales reaching 4% in market shares and electric motorcycles at around 1.5%. The government aims to accelerate adopting by targeting 200,000 motorcycle conversion in 800 new units. Key factors driving this growth include strong government initiative, infrastructure development, and foreign investment. With major players like BYD investing in Indonesia, the country is positioning itself as a leading EV manufacturing hub, leveraging its rich nickel reserve and economic incentive. Additionally, the expansion of EV industry is expected to create job opportunities and contribute to the economic growth in Indonesia. Let's dive into the comparative analysis Indonesia versus other countries. To understand where Indonesia stands, we can compare its EV policies and market readiness to the other countries. China has the world's largest EV market thanks to strong government support, extensive charging infrastructure, and well-established battery production. India also supports EV adoption to its fame, faster adoption and manufacturing of hybrid and electric vehicles scheme, which provide a direct financial incentive. Meanwhile, European countries offer tax exemption and strict emission regulation that drive EV sales. Compared to the niche nation, Indonesia is still significant room for improvement, particularly in infrastructure development and policy stability. A comparative analysis of EV market readiness in Indonesia, China, and United States highlight key difference in supply chains, manufacturing capabilities, and infrastructure development. Indonesia, even though Indonesia is rich in nickel reserve, is attracting major battery investment and aims to become a regional EV hub. However, its charging infrastructure is still in early stage of development. China dominates global battery production and has the most advanced EV manufacturing ecosystem, with strong government support for charging infrastructure. Meanwhile, the United States is working to reduce its dependence on imports, providing incentive for domestic EV production and is expanding charging networks through public and private investment. These differences shape each country's role in the global EV markets and influence their competitiveness in the industry. Electric car adoption in Indonesia is growing, with EV reaching 4.11 market share in 2024 and projected to surpass 5% in 2025. However, price remains a key barrier, as a locally assembled model like a Hyundai Ioniq 5 costs around 750 millions, while imported model like Tesla Model 3 exceed 1 billion rupiah. Compared to conventional internal combustion engine or ICE vehicles such as Toyota Avanza priced around 250 millions, EV require a significant higher upfront investment. Despite lower fuel, maintenance, and tax cover over 5 years, the total cost of ownership or TCO for EV is more than double than of ICE vehicles, which around 355 millions. And for EV itself, it's around 796 million for the 5 years. This pricing gap presents a major challenge for mass EV adoption, highlighting the need for stronger incentive and cost reduction to make EV more accessible to Indonesians' customers. Electric motorcycle itself are slowly gaining traction in Indonesia, with a market share of around 1.5% in 2024. The country has massive two-wheeler market with 133 million motorcycle and 6.5 million annual sales. To accelerate the adoption of EV motorcycles, the government targets 2 million e-motorcycles by 2025, with an expected growth rate over 2 to 20% per year. Battery swapping introduced by Gogoro and Electrum under Gojek help reduce range anxiety and upfront costs. Riders can swap batteries instead of waiting for charging, but challenges remain, such as limited station and lack of standardization. Ride-hailing companies such as Gojek, Grab, Bluebird are pushing fleet electrification. Gojek aims to fully switch to e-motorcycle by 2030. Grab focus on the delivery services, and Bluebird is exploring expansion beyond electric taxis. However, challenges like high cost, range limitation, and insufficient charging infrastructure still need to be addressed for the wider adoption. Electric motorcycle offers a low fuel cost, government subsidies, and environmental benefit. However, key challenge remains such as high upfront costs, limited charging station, battery lifespan concern, and weak second-hand EV market. This barrier make consumer hesitant, with many still preferring cheaper internal combustion engine motorcycle or car. Improving charging infrastructure, battery affordability, and resale value for the EV vehicle will be crucial for wider EV adoption in Indonesia. Let's discuss about the challenge to Indonesian EV adoption. One of the biggest challenge to EV adoption in Indonesia is affordability. Most consumers prefer cars priced below 300 millions, making premium EV like a Hyundai Ioniq 5, which priced around 700 millions, out of reach for many. Even electric motorcycles, which are only 50% more expensive than ICE models, remain costly for low-income buyers. Limited financing option further slow adoption. Unlike ICE vehicles, EV loans come with higher down payment, around 30%, and stricter loan terms due to uncertainty about the resale value. Leasing models, which are common in China and Europe, are still not widely available in Indonesia, forcing buyers to buy full price upfront. Without better financing scheme, leasing programs, or lower prices, EV adoption will remain slow, especially among the middle income consumer. Indonesia faces a major challenge in EV adoption due to limited charging infrastructure and grid readiness. As of 2023, only 440 public EV charging stations and 960 battery swap stations exist, far below the government 2030 targets of 32,000 stations. Over 65 of the consumer sit in this major barrier. State-owned PLN and Pertamina are leading efforts to expand charging networks, aiming to install 24,000 public chargers for cars and 12,000 for electric two-wheelers. However, integrating renewable energy into the grid remains a challenge, as Indonesia's energy mix still relies heavily on a fossil fuel. To achieve sustainable EV growth, Indonesia must accelerate charging station deployment, improve grid stability, and transition towards cleaner energy resources. Indonesia EV market face uncertainty due to inconsistent policies and over-reliance on Chinese import. Frequent change in incentive such as a fluctuating VAT reduction and complex subsidy requirements create uncertainty for business and consumer, slowing market growth. Many buyers delay EV purchase, waiting for better incentive, while manufacturers hesitate to commit to local production. Another challenge is Indonesia heavy dependent on China's for EV component, with 80% of battery imports and 78 of EV cells coming from Chinese brand like Wuling. This over-reliance poses supply chain risks, trade vulnerabilities, and limit local value creation. To reduce dependency, Indonesia is investing in local nickel processing and restricting raw export to encourage battery production domestically. Attracting non-Chinese investment is also crucial for strengthening Indonesian EV industry. To summarize, Indonesia EV market has great potential, but adoption remains slow due to affordability issue, lack of charging station, and unstable regulation. Government incentive help, but they need to be more consistent and better implemented. Additionally, reducing dependency on Chinese imports and developing a local battery industry is essential for the long-term success. To accelerate EV adoption, Indonesia should focus on stabilizing incentive, which means fixed tax reduction and subsidies for maybe 5 or 10 years to boost investor confidence. And the second, we can expanding charging networks to increase the number of fast charging and battery swap stations. And the third, developing local EV production, encourage domestic battery manufacturing and reduce reliance on import. And the fifth, improving financing options like lower EV loan, interest rate, or introducing battery leasing models. It will increase an EV adoption. And the last, building a second-hand EV market established by government, backed battery warranties and trade-in programs to increase consumer confidence to adopting a EV vehicle. And then for a future research direction in Indonesia, future research should focus on improving battery technology, better understanding consumer behavior, and assessing the sustainability import of the EV in Indonesia. That's all. Indonesia has a potential to become a leading EV market in Southeast Asia. However, success depends on overcoming major challenges such as high costs, infrastructure gaps, and policy instability. By addressing this issue, Indonesia can create more sustainable and competitive EV industry. That's conclude my presentation. Thank you for your time and attention. I hope this has provided a valuable insight into Indonesian EV market. If you have any question, I'd be happy to answer them. Just leave them in a comment below. Thank you so much. That's all for now. Bye bye.